Welcome to the North Haven Market Wrap for the month of August 2017. Well, August was much of the same that we experienced in July, with a very flat month overall. In fact, the market really didn't move at all for this month. And this wasn't just the case in Australia, it was also the case overseas, where both the US market, in fact world markets in general, recorded a 0% movement over that month. The result in Australia was particularly surprising, given the fact that we went through the reporting season and we had some fairly mixed results. Telstra, Domino's Pizza, Harvey Norman all disappointed, and in the case of Telstra it was quite a significant move, cutting their dividend by a substantial amount. But on the positive side of things, we had Qantas announcing their second largest profit ever. Commonwealth Bank continued to record profits, albeit and also announcing some fairly significant corporate governance issues, which essentially saw their share price sold down substantially, despite the fact that operationally the company seems to be doing quite well from a profitability standpoint. CBA for a number of years has traded at a premium to its other bank peers, but that premium essentially has been eradicated in the span of the last 3 or 4 weeks. BHP had a very strong result. In fact, the resource sector in general was largely responsible for the increase in earnings reported by the overall market during August. BHP has made the fairly startling announcement that a couple of years ago it was costing $16 billion per annum to keep the business running in terms of capital expenditure requirements. Yet today, that capital expenditure annual bill is down to about $8 billion. So that focus on cost has been a significant advantage for BHP. Medibank Private had a pretty good result and showed that they're investing well in advertising and in customer retention efforts, and that's translating well to the bottom line. And we've also had a good result from Sydney Airport, showing that traffic continues to perform above expectations. Overall, we continue to see the fact that interest rates remaining low is quite supportive of equity valuations, and with expectations being fairly modest at the moment, going forward, corporates should be in a position to generate decent returns. And that's it for the month of August. Thanks.